Hey guys, what's up? This is Stock Retail coming back to you on Sunday afternoon, my time. For many of you, probably Sunday evening or wherever you are around the world. Greetings to you on your Sunday or your Monday. Couple things. One, sorry I haven't made any videos in a while. If you're following me on Twitter, then you know I had a business trip. I had some family stuff going on. Nothing bad, don't worry, good stuff. And then now I've caught a head cold, so that kind of sucks. But that'll happen sometimes when you're traveling. I went clear from the West Coast to the East Coast, so about as far in America as you could travel for this work trip. So a little bit more focused this week and not able to have time to create some videos. But here we are today. Just a quick plug, I guess, if you want to track me a little more frequently and you're only on YouTube and you missed, some of the frequency of the videos, then following me on Twitter, you'll see me a lot more often because it's easy for me to fire off a tweet in 20, 30 seconds or whatever versus making a whole video. But I guess with apologies in advance for all my sniffles and coughs today, I'll try to keep those at a minimum. Got a little water to my side here. Let's go through Q3 earnings. Boy, we've had a lot of news the last week or so, with everything going on with Taylor and then that going global, with a whole lot of rumblings about Beyonce. Again, if you follow me on Twitter, you would have seen that. But I'm sure that there are plenty of other people who've shared that on YouTube and Reddit and elsewhere. So for most of you, you probably know all of the smoke signals we've gotten on Beyonce and how likely that looks to be in AMC theaters as well. I'm going to stick to a Q3 earnings preview today. I decided to split these out, so we'll do Q3 today. Probably even in just a day or two, I'll turn right back around and do Q4 and 2024 as a whole. And then a couple other videos I've got coming up that I'll just kind of tell you about before we're done here. So without further ado, let's just kind of dive in and let's start with the box office because obviously we're a movie company. Love that Adam has been diversifying us as we go with popcorn, now with concerts, some discussion about candy, beer, and wine, all of that happening. But, we're still a movie company at our core. So let's talk about that. If you didn't see, so the landing numbers as of really last night, so as of Saturday night, we were up 38% year over year on the box office. So you can just kind of see these numbers on the screen. I've given you the numbers from Box Office Mojo here. And all of this I'm going to build up to give you the actual earnings forecast. I'm going to predict what we're going to hear in the November earnings call. So just hang tight to that. So we're up quite a bit over last year. You can see $721 million up. We beat or met three of the six kind of pre-2019 years. So if you kind of go back to 2014 here, you can see we're actually bigger than 14, right at 15, and almost at 17. But you can see we're at half the movies, right? So in some cases, half, in some cases even less than half of the movies. And we're already pretty much back to the same box office. So I've had other videos where I've walked you through demonstrating how badly Shorty is lying to you, how much they're distorting. The fact that we're already at pre-COVID revenues on half the movies, what do you think happens now that the writer's strike is over? Once the actor's strike ends, what's the future of the movie industry as more movies come back? I'll wrap that into the 2024 forecast when we get to that. But big things coming, great quarter, up 38% year over year. And then notice, I find this really interesting because typically when you're growing fast, you start to sort of like if you could imagine a chart that goes up but sort of starts curving down, like the line flattens and gets less steep. In this case, while it didn't, you can see last year had grown 41% year over year. This year grew 38%. But notice the actual amount we grew. The amount we grew has increased rapidly. So you can see that last year, 2022 versus 2021, we grew about $500 million in Q2. But then look at this year, we grew another 721. So the pace of the amount of growth is significantly higher. I want to say that was like close to 40% more, like 30 some percent more. And so that actually caught my eye that not only did we keep growing at about the same percentage rate, but that's on a bigger base now. And so the amount of growth is radically different. That $500 million versus almost $750 million that we increased the last couple of years. So really amazing growth. Q2 rocked it. This was great. Had we not had Q3 rocked it. Had we not had such an amazing Q2, this would have been the biggest post-COVID box office ever. And as it is, we're going to talk about how close it was. So speaking of which, let's go compare back to Q2. Now that's going to be really helpful because we know what earnings were in Q2, right? That just happened. We know all the expenses, we know all the revenues. So for me and for you, it's really a really relevant comp. You kind of call things comps in planning, right? Comparable. So as you forecast, it's really great when you can find something that you can compare to, because it helps you kind of check your forecast and think through whether it's accurate or not. So let's compare to last quarter. And remember, we know that last quarter we had about a $9 million positive earnings. It was 8.6. And you can see here, the box office is almost the same. We're down 1.2% as a total amount on the domestic box office. We'll talk about global in a minute. But, that's 98.8% of the last quarter's box office. So probably a fairly comparable gosh, guys, there's the head cold. Quarter, where we've got, almost the same box office. You can see, 2.64 versus basically 2.68. Very, very close at the box office to last quarter. So we're going to have the ability to compare. But interestingly, note that on the amount of movies, even versus just last quarter, we have a significant amount less. So almost 12% less movies. I believe that matters because we're going to be able to talk about efficiencies when I talk through operating expenses. Operating expenses is one of the biggest expense line items for AMC, so it's something we want to pay attention to. And if you followed me for a while, but I guess I'll say it in case there's some new followers. I look through every line item in the earnings report. So you get something called a profit and loss statement or an income statement. So I go through all the line items of income, all the line items of expenses. I have those for, gosh, I don't know, 15 to 20 quarters now. And so I've kind of learned over time really well how those track and how to forecast those. And then I look at something called the balance sheet. I keep saying sooner or later I'll make some videos just educating how to read an income statement and how to read a balance sheet. So the point is, I know that if we have less movies, there's just a little bit of an efficiency there on the operating expenses. You have that many less posters to put up, that many less setups for screenings, even literally the file or the tape, depending on, I guess the can, maybe you call it in the movie industry, setting up the actual showing. So there's just kind of less, even just setting it up on the app, selling the tickets, there's a little bit less on the operating expense side to have to deal with if there are less movies, but you hit the same revenue. So that's going to matter in earnings. We're going to talk through that. Okay, so let's keep going. We just talked about how we basically reached the same box office, but on 12% less movies. So I guess I've already talked that through. So 98.8% of the box office on 88% of the releases versus last quarter. So that's generally, I'd love to see the box office still growing, but I guess if there's sort of a silver lining here, it's that efficiency I just talked about. So let's go through some of the key inputs to the forecast. So before I give you the number, I want you to see all this. And there's a reason too, I really want you to know the details. I know some of you will skip ahead, that's fine. But for those of you willing to hang in here and get a little educated and understand the numbers, there's two reasons, right? So if you've been around this channel, I say there's no trust me bros here. So I'm going to show you the numbers and talk a little bit about my logic and reasoning for how I get to a Q3 number as I compare to Q2. So that's one, so that you can question for yourself and decide, where do you think I'm too low? Where do you think I'm too high? That kind of thing. The other reason is, of course, I've seen a real ramp up on Twitter, at least, in terms of distorters trying to spread distortion messages. And so I think the more that you know how to forecast, you can start to spot just really obvious lies. I'm actually going to show you one of those in this video. I'm going to out a distorter. They're a pretty bad one. They've kind of come at me quite a few times and come at people around me. And they sort of stepped in it today, where they shared a distortion that's so painfully obvious and so stupid, frankly, that you ought to be able to see through it. But the way to see through it is how to talk about these numbers, and you understand the ins and outs of the business. So I'm going to give you those. All right, so first off, I've said before on this channel, reminder for either if you've forgotten or you're new here, all of AMC's international business, ticket sales, food and beverage, other revenue, any U.S. company translates their international revenue into U.S. dollars for the earnings report. And so you got to report on a U.S. dollar basis. Well, that's meant the last couple of years there's been a real drag on our international sales because the dollar had strengthened against other currencies, which really means when you translate, say, a euro ticket sale or an English pound ticket sale, When you translate that back into dollars, it was basically, let's call it, buying less dollars. And so it was making our international business look weaker, um, just on what's called a FX, foreign exchange basis. It's not really that less people were going to movies. It's not that they were paying less. It's that the translation, the FX exchange rates, were not in AMC's favor. But I want you to notice that look at the beginning, the end of Q2, or really it's the beginning of Q3. The euro, you needed 1.09 basically euros to get a dollar. Well, now you only need 1.056 as of the end of the quarter. So I don't quite know what spot rate AMC uses in their translations. There's usually very standardized ways that you use rates. There's like 30-day rates and other longer rates. I am not an FX expert. I happen to work near not near, even literally with the people who were hedging for a Dow Jones company. So I know a tiny bit about it, but that's just from sitting next to them and asking questions and learning. I did not myself do that kind of work. But I guess it's kind of like I stayed at a Holiday Inn. I'm smart enough to talk about it. So here's the point. The euro, basically think of it as the euro gained against the dollar, or really what it is here is there's like a 3% improvement, where the euro against the dollar improved by that 3%. So now our international sales, let's say you had even the exact same amount of sales in Q2 and Q3 for, let's say in Europe, like we have Odeon, we have UCI, some other brand names. Now, when you translate that into dollars, even if you had the exact same amount of money and no growth, you're going to see growth on your international sales by those 3 points. Because it's, like I said, if you think about it this way, it's basically buying more dollars on the earnings report. So that's in our favor. So that's the first thing you need to know that Shorty's not talking about, is we have the foreign exchange rate is basically in our favor this quarter. Okay. And by the way, shout out to an account on Twitter who, if I wanted to know, like, hey, where's this going in the future, I would ask, and I have asked in the past, is Peter Hahn. He's a kind of a financial guru, in my opinion. Love his work. So I guess shout out to him. If you wanted to know more about FX, perhaps track him and watch him, not me. Okay, so popcorn, reminder, in Q2, that was basically our launch of popcorn. We weren't fully ramped up. We weren't fully live the whole quarter. So that impacts your revenues because at first we had, I don't know, a couple hundred doors. And remember, they were selling out. So we had stockouts. Stockouts, I'm sure you kind of understand what that means, but just in case, it just means you ran out of product. So if I walked into the store to buy some, that's called a missed sale or a lost sale. You didn't get the sale from me coming because there was no product to sell. So when you don't have stockouts, you can get more sales. That's a big deal. I guess I won't go deeper there. You get into some inventory management concepts. There's kind of two sides to that coin. But anyway, we had less doors for part of the quarter, and we had stockouts, so we had less sales for part of the quarter. So if you compare Q3 to Q2, it compares very favorably, which I'm calling out. We'll have less stockouts this quarter. We started to be able to order online as well. And then we had the full 2,600 doors for a lot more days this quarter. And so just naturally between, let's say, market awareness, because if you're a non-ape, you didn't know about AMC popcorn at first, and probably over time, some more people found out about it. So market awareness, that's going to potentially increase your market share, more doors, and less stockouts. All of those things mean more sales in Q3 than Q2. So whatever number you think popcorn's hitting, I have stayed very conservative with that, frankly, until I see Adam and team report an actual standalone popcorn number. I'm not allowing myself to get too much into hopium on that. However, he said within a few years we could have a 9-digit business, $100 million top line business. I'm not anywhere near that. Like that's not even in the same neighborhood as what I'm doing. But nonetheless, no matter what, you at least can logically say, hey, I know for sure Q3 popcorn sales was bigger than Q2 popcorn sales. And so like outside, here's two things already. We're saying outside of the box office, right? The box office was basically flat, almost the same number as last quarter when we had positive earnings. But now foreign exchange rate is better. So that gives us an improvement in our earnings. Popcorn has more sales. That should be an improvement in our earnings. Let's talk about film costs. Last quarter, if you didn't know, was the highest film cost. So what I take, first of all, there's a line item in the expenses that is film costs. And then I take that and I look at that as a percent of our admissions revenue. And I've tracked that for those kind of 15 to 20 quarters. And so I can see over time, that's how I knew, for example, we've generally been better than pre-COVID on that. This is the cut that AMC has to give back to studios, which, by the way, eventually when we're talking more about concerts, that's why that's also a really big deal, because if AMC is the distributor, you're giving less of a cut back, right? AMC's, first of all, getting a cut from competitors on that, and then keeping some distribution cut for itself. That's another conversation. I'm not going deep on that in this video, but just file that away as a really big deal. So in Q2, we had the highest film cost as a percent of revenue. Part of that also has to do with when movies launch, like the first weekend and the first couple weeks and etc. You can kind of look this up on the internet. You pay basically a higher rate back to studios. And then movies that do well over time, the theater starts to keep a little higher percent. So just the mix of movies. Remember, actually, let's go back a second. Remember last quarter we had that 195 movies versus this quarter 172. So you can logically say, oh, because we had about the same amount of revenue, that means a few more of these movies this quarter, kind of ran longer and delivered a little more revenue, and maybe the theaters, the exhibitors, got to keep a little bit better percent than last quarter. So I am saying we improve. I have in my forecast, now that's a forecast, that's just me kind of guessing at a number, about a 2-point improvement due to the longer running. So think Barbie and Oppenheimer basically running the whole quarter and just crushing it. And even some other films like Mission Impossible and Indiana Jones and Elemental ran for a very long time. Elemental released last quarter, but we got, I want to say, maybe $75 million at the domestic box office this quarter, even though it had already launched last quarter. So there's some of these that were long running, and my assumption, it's an assumption, and I'm sharing it with you, is that we're not going to repeat having the highest film cost percentage in several years. I'm going to say that we're going to be a little bit better, but I'm actually still keeping it as, I think I've got it as the second highest film cost percentage in all of the sort of post-2019 era. So I still stayed somewhat conservative, but you can see here, that is a savings of $17 million over last quarter. Even just that 2 points improvement against then, our sort of admissions, that's a savings of $17 million. So that's in our favor. So already, boom, 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 you see 3 things that are in our favor this quarter, at least in my forecast. The first 2, those are definitely happening. The only argument is how much of an impact. This third one, I've just made a logical case for it. You've got to decide if you agree or disagree with me. Okay, debt. This definitely happened. So we landed last quarter at $4.816 billion. Lower than pre-COVID, by the way. I'll keep reminding everybody, our debt is lower than in 2019. Maybe it's, I can't quite remember when exactly, but it's lower than pre-COVID debt. Some of what got paid off last quarter. So there's basically, I want to say, $66 million. That might not quite be accurate. Now I'm questioning that. There was some savings, and I might have put the wrong number here, but I'm going to go with this so that I don't go back and redo this on the fly. There was, let's call it $66 million. I don't know why I also have 71 in my head, guys, so we'll have to fact check that after this. But let's use the 66 for now. So in effect, I'm making this sound worse for AMC. So if we find out later that I got it wrong the other way, then there'd be more upside to this. So I'm okay with that because we'll keep this conservative. So last quarter, if you remember in the earnings call, we were told there was like $42 million paid off. I'm going to assume that was not paid off on day 1 of the quarter. And my point being then, you save on interest payments on that. Think about any time you get rid of some debt. Now you don't have to pay interest on that debt. And so there's some part of last quarter that interest savings was already in the numbers. And then I've taken this quarter and said, well, there's a little more interest savings than there was last quarter because it's already been paid off for the entire quarter. So there's no interest on that $42 million at all this quarter. So that's an improvement this quarter. And then we were told in the earnings call they had paid, I'm calling it this 24 here, paid more in July. Well, that's this quarter, right? So I'm going to say, for purposes of my forecast, we did not have any interest savings in July on that 24, but the other 2 months, in August and September, it's already been paid off. You have no interest to pay, so that represents more interest savings. And then who knows if they've even paid off more debt during the quarter that they haven't yet told us about. So I have forecast not quite $2 million of savings in interest payments because of that reduced debt. And I'm telling you, there's potential upside to this. It could be even better. So now you can see how if Shorty's coming to you and they want you to focus on, oh man, we're $30 million lower at the box office than last quarter. And they want to get you fixated, whoa, 30 million sounds like a big number. Well, first of all, I've already told you that's almost 99% of last quarter in terms of the box office. And then all these items, several of these being expenses, Then also the translation of sales, popcorn sales, all of these so far are better than last quarter. Let's keep going. If you don't know, the Hycroft investment that we have, take all the shares that AMC owns, take the price on the first day of the quarter, take the price on the last day of the quarter, and then whatever the difference is, whether it went up or down during the quarter, that's going to show up as income or expense on AMC's books until AMC ever sells that stock. It shows up as income or expense. The example I often give is if you go back, I don't know, maybe 3-4 quarters ago, Amazon had a wild quarter where Rivian stock had gone way, way up, and it made Amazon look like they had awesome earnings. And it was really all just the move of Rivian. Like without Rivian, Amazon actually had gone down in their earnings. But the stock went crazy because it looked like they had an amazing quarter because of the Rivian stock movement that showed up as income on Amazon's books. Well, so in this case, I went and looked at the first day's price to the last day's price, and you can see there was a loss last quarter. There's less of a loss this quarter, and so effectively, that's $2.7 million better than last quarter. So you can see there's all these items that are starting to be better than last quarter. Now here's one that goes the other way, and this one I'm just going to tell you. You can even see the wording on the left says wild guess. I have no idea. This one I have to guess every quarter, and it's just one of those things I can't really predict. So other expense, and then you see if it's negative, it means it shows up basically as income. Last quarter, we had this $31 million of income. This was to the positive for AMC. And you can go back through all the quarters and you'll see wild variations of this number. Sometimes there's a big expense, sometimes there's a big income, and then sometimes it's small to either side. So I have just said I'm going to take most of that out. Most quarters, there's a little bit of income here. I have just said I'm going to go ahead and take it out, most of it out. So you can see that is a $25 million hit. Last quarter to this quarter, I've made it $25 million worse in my forecast than what it was. Your guesses might be as good as mine on this one, unless we ever get guidance from AMC on kind of how to better forecast this. Okay, operating expense. I told you that's one of the biggest items in their expenses, and you can see it's big, right? Like last quarter was $400 million, 412. This quarter I have brought that up to 414, and that is actually a very conservative number. In other words, it might be better than that. Might be better than what I'm telling you, because operating expense has to do with, I already told you, like how many movies you show, how many showings there are, how often you're open. A lot of the numbers in here have to do with keeping the lights on, electricity, water, sewer, and paying your employees, and a lot of things like that. So because we had a little bit of efficiencies, like I said, with less movies, that would have pushed us a little better. But also I'm assuming, you have inflation in your salaries, you have inflation in your utilities, things like this. So I've actually gone ahead and basically made it wash out a bit, where the improvements did not outweigh kind of, let's say, inflation on this number. And so that all is mixed in there. So this only shows that I'm saying $2 million worse. But if you were to separate them out, like inflation was a much bigger hit than $2 million, but then we bought some of that back with some of the efficiencies that you would normally see because of how this quarter looked. So $2 million worse for us. That is, all of this is going to add up to our bottom line, basically. So I'm telling you how, plus or minus last quarter, we're comparing, how do I get to the bottom line difference from last quarter? Next one, food and beverage per person. You can see I'm just up 1%. And I'm telling you, I think there could be more upside to this because of the foreign exchange. So again, remember, you're going to translate the food and beverage sales outside the US. You're going to translate that into dollars. And I've said, hey, there's a 3% improvement on FX. There's likely already a 1% inflation rate on just the prices we pay for the food and beverage anyway. So if FX adds on top of that, this number might improve. And food and beverage is no joke. I mean, it's a really big income item for AMC. So this could be some upside here to my forecast. Same thing on tickets per person. So, sorry, I didn't highlight that with the green, but highlight that green in your mind. Basically the same as the food and beverage. Up this just a little more than 1%, but I'm telling you there's upside because of the foreign exchange, that maybe ticket sales in Europe are actually higher than what I'm forecasting here. And then on taxes, that should be kind of red. I'm saying And by the way, taxes is a little bit hard for me to guess too. I'm just saying we're paying a little bit more taxes than last quarter. Part of that having to do with having um, two decent quarters in a row. And you're hearing a lack of confidence from me on that line. That could be anywhere from a few million bigger to a few million less. There's a lot of different things that can impact how taxes work and how you file with the government, write-offs, different things like that I won't know until earnings come out. But at least you can see my assumption. So all of that adds up to a bottom line for us. So I'm going to give you the revenue that I have, the expenses, and the earnings. So revenue, I've got us $11 million better than last quarter. And you can see I'm giving you what's driving that. So mainly that's that foreign exchange rate. Remember, we were on like 99% of the same box office, almost the same box office. So we should be at almost the same revenues. Only I'm a little bit higher because I'm saying that the foreign exchange rate will help us a little bit. I told you already, popcorn's a little bit bigger, ticket prices moving up, food and beverage moving up. Then, obviously what drags back from that is that little bit of decline in the box office. And so I get to a little bit higher number, but very, very close to last quarter, almost flat. Expenses. So think of this as a red, like this is more of a minus in your mind. Notice how these cancel out actually, and that was not on purpose. I didn't do anything to get to that number. It just happened. So mainly, I told you about that other expense. That last quarter was a $31 million income, and I took 25 of that out. So you lose $25 million right there. Which effectively increases your expenses by $25 million. But offset, I told you about the reduction in interest payments, the reduction in total film costs, and then the reduction in the Hycroft losses for the quarter. By the way, again, go back to that Rivian story. I'm very, very excited about the future of Hycroft and what that's going to mean to the future of AMC's income statement and ultimately balance sheet, if or when it's ever the right time. Like if Hycroft is ready to stand alone and AMC says, all right, we're going to pocket these profits. I still believe that's going to happen, especially based on macroeconomics, precious metals, currency devaluation, a lot of things. So that's a whole other discussion. So please don't hear me at all sounding negative on Hycroft. I'm just giving you the facts for the quarter. That was still a loss on Hycroft, but I like to think that that's going to change one day in a radical way. So you see that these washed out. So actually I'm saying we have the same earnings as last quarter. Basically identical. If you go to a few more decimals, it changes a little. But so I'm saying still a positive earnings quarter. I told you there's possibly some upside in foreign exchange and a couple other things, maybe the food and beverage per person. Remember that in July, we had both the highest revenue for AMC ever. I think it was the highest admissions and the highest food and beverage ever. And there were quite a few weeks. Adam had some tweets, a couple of weekends and a couple of weeks where he was saying food and beverage per person, and this was in July again, was like the highest we'd ever seen. So there's a chance I'm being too conservative with this. Just keep that in mind. But I'm saying I anticipate, and boy, guys, this is only the second time I'm giving you my earnings number ahead of the earnings call because it's really hard to do this at a accurate level. I've been very accurate the past few quarters, so I've been willing to start sharing it. But there are things that could swing all over the place, and I'll do a walk after the fact to show you where I was right and where I was wrong, and we'll go through that. So don't take this as any for sure number. I'm just giving you my forecast. Okay, I told you I'm going to talk about Distortion. So there are a host of distorters. They attacked me pretty hard actually on Friday. I think there were no less than 50 accounts on one post alone on that one day. They did not like that I was spreading some positivity. And so they attacked it. Some of them were bots. Some are what you call sock puppets. There's interns. And then some were bigger accounts. Some famous ones even. And so the point is, they're out there distorting. Somebody sent me a message today that I want to just walk you through to see what you're up against and how to kind of pick it apart. So first off, here's the distortion. This account, SouthSync, they are a notorious distorter. They have come at me. They have come at my friends many times. And here's the thing, I've told some friends in private, it is pointless in my opinion to argue with someone like this because they're not interested in a good faith discussion. They're not going to say, oh wow, you have a really good point there, and concede any point. They are a distorter. Their whole job is to never speak truth and to never acknowledge reality. They want to paint a picture for you and get you scared. So look at the top right, my bullet. So here's the distortion. September, compared to 2001, oh man, mega losses. Run away. So let's look at what they've said here. Man, we may not beat 2001 revenue. September's way worse than I projected. Look at the crazy week by week drop. Net losses 50 to 75 million. Now, I just walked you through. Go back. Okay. Let's take a logical, slow your roll, calm down, look at the line items, think through what actually happened in the quarter, detailed view to get to a number, right? Now, you could absolutely challenge my number. You could debate it. You can point where you think I'm wrong. Got no problem with that. But to say we had 99% of the same box office as just last quarter, which was positive, and that's domestic, right? I actually think international box office was maybe flat or even better. 99% of the same box office as last quarter, with improved foreign exchange, less losses on Highcroft, bigger popcorn sales, and you're telling me we went from a positive 9 million to maybe a negative 75 million? I hope you see the obvious distortion here. There's only one of two things. This person is an idiot or this person is a liar. And I've seen them long enough to know I'm going to go ahead and accuse them of, I'll call them a distorter is the word I'm using. They're intentionally distorting. But now let's walk through, you don't have to take my word for it. Let's walk through how they're distorting. Well, first off, let's look at September versus last year. They're comparing to 2001. September, terrible. Okay, cool. How about versus last year? Oh, interesting. September improved almost 50% year over year on less movies. And your biggest movie is more than double last year's biggest movie. They aren't acknowledging any of that, are they? Oh, September was worse than I projected. Well, what the heck were they projecting? We beat last September by 50%. I didn't have a bigger projection than that. When everybody was out there tweeting 3 billion, look back and you can low-key see that I was saying, guys, we're not going to hit that for the quarter. When you go look at the actual movies coming out, the dates when they come out, the projection for each movie, you kind of have a realistic view. And I always thought we were going to be between 2.5 to 2.7. And here we landed at 2.64. That's a great quarter. We actually beat my forecast, frankly, this quarter. So this guy is trying to pretend, and it's a straw man, right? They set up a pretend forecast that September was going to be so huge or something when everyone already knew going in. No, it's not. We already knew all the movies coming out, that it was a quiet September, but far, far better than last year, September, right? We're going the right direction. That's all I ever care about. Are we going the right direction to end the short thesis? And yes, we are. We're up 50% year over year on the quarter. Right? So if you think about growth in the quarter, let's look at that. The actual quarter grew 38%. So do you realize that means September's growth out-indexed, over-indexed the rest of the quarter? September grew faster than the rest of the quarter. And this was an amazing quarter. We grew 37% year over year. Anything calling that a negative is ridiculous. Where do we have that? I'm going to go back. Sorry for all the clicking noises. Here, actually, I think I can do this. Nope, I can't. Oh, there we go. Okay. We grew $721 million versus last year. 38% growth, right? Look at here's this year, here's last year. Only September grew 50%. So this short is trying to, first of all, do you even care about their forecast? And I actually am calling BS that I don't think they had a forecast. I don't think it was a forecast at all. I think they're just telling you, trying to get you to think September's terrible. And how do you get to a $50 to $75 million loss? I just told you, 99% of the same domestic box office. Right there, you should say, how in the heck do you go from 9 million on the positive to 75 on the negative at 99% of the same box office? You're either smoking something or you're lying to me on purpose. You all have already heard what I think. So the verdict. Oh, yeah, so here you go. Year over year, plus 46%. Reminder, too, September, back to school, back to work. People are done with summer blockbusters and summer vacations. It's just logical, guys. And that's what shorts here. Look at how scary. Look at words. Crazy. Net losses. 2001. They're trying to get you in the moment to sway your sentiment. I've said so many times on this channel, Shorty wants to get to your mind and your heart to get to your wallet, okay? Or look at a whole video I did on the manipulator versus the informed investor. And I share with you stuff that's academic research. I share with you Gary Gensler from the time he was a professor at MIT, and I share with you at the SEC itself. This is not conspiracy stuff. I share with you how manipulators try to get you out of a stock. And this, I believe, is the worst, most egregious version, perhaps in the history of the stock market. And I'm going to continue to highlight it until these guys are in jail. Frankly, this is illegal, what this person is doing, in my opinion, because you're going to find out they have a short position. While they pretend this stupid popcorn thing that comes from Ethan and those guys, or Eton, whatever you want to call him, the whole crew, they're trying to get your personal information, right? You go there and you register as a no voter, and you give them a bunch of personal information about your shares. This guy doesn't own, he's not long. Come on. This guy is a short and distort all over the place. You can smell him a mile away. Okay, enough about that. So the verdict. This is 109% distortion. He tells you we go from a positive 8.6 to a negative 50 to 75 on an identical box office with less debt, more popcorn, better foreign exchange rates, and less Hycroft losses. So just stamp it, confirmed manipulator from team SFYL or 109. He's on one of those teams. Frankly, doesn't matter which one. Okay, back to the positive. Other outlooks, I'm not going to cover these in detail today, but just think about what's coming. As you continue to see distortion ramp up, there's a reason for the distortion. They do not want you to understand what's coming. Q4, when I do that forecast for you, I've already played with the numbers. And again, down to the very line item level of the P&L and down to the line by line on the movies. But of course, we got to talk Taylor and in all likelihood Beyonce, which is game changing. And I will tell you, for a while, I was, I guess I'll just be honest, I was not looking forward to sharing the Q4 forecast because when some movies moved out during the strike, there was a heavy impact to the quarter. I'm not going to lie to you. But these concerts coming back in, based on the forecast that I have right now, and based on the industry forecast, I am very, 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 very excited to share the Q4 forecast with you. And I'm calling that a new era and a rebirth. Obvious play on words there, but also I really mean those words. It is not just, okay, yay, we're going the right direction. When I show you the Q4 forecast, I'm going to show you something we have not seen these levels yet. That's an opinion, that's a forecast. So always remember that. No trust me bros here. 2024, then even go beyond that. We're just going to be in a new reality. Hollywood starts to ramp back up. Obviously I'm counting on the actors' strike ending. Plus, do you really think, two things. Do you really think there's not going to be any Taylor Swift or Beyonce revenue in 2024? My opinion would be they're in very, very likely with Beyonce, and I'd still say likely with Taylor. And then do you really think there's not going to be other concerts? You look at the success of this and the desire to shine of some of these artists, that they're not going to be knocking on Adam's door. So we'll talk about that in the 2024 forecast as well. That Popcorn, we're going to get an announcement that they're expanding doors. What if they partner with a grocery store that overnight doubles the amount of doors we're in? And we have that for the full year of 2024. What does that do? He's hinted at maybe having wine and beer. I'm not even suggesting that's big, but it's not zero, right? So that's further improvement. And same thing with candy. We are going to be in a very, very different place. And then 2025, when Hollywood really has ramped up and all of that is just humming, it's not even the same universe. So we'll talk more about that. In fact, that's the next video is coming. I'll do Q4. I'll do 2024. I had done a Twitter vote a while back, and the Twitter vote was kind of 2/3 of you said you'd rather see forecasts first before I do the proxy vote. But I will come into the proxy vote before we all need to vote. I don't think we need to vote until, I don't know, correct me if I'm wrong, guys, but I want to even say it was basically into November before we need to vote. I'll double check that and make sure I get a video out in time of just going through all the language of the proxy vote. I've already seen some of you have voted already. Kudos to you for having your own point of view and just doing that on your own. But I will cover for anyone who's interested in my point of view on the proxy vote. I will not tell anyone how to vote. I'll just tell you what my point of view is. And we'll specifically dive into the concert impacts. So I just have two final thoughts. One thought for Shorty, one thought for Apes. Shorty, everybody loves the sunshine. I'm just going to let you figure that one out. Everybody loves the sunshine. Apes, I don't think we're just changing the game. It's hard for me to explain. You guys know a little bit about myself. first off, if you're new here, I had 21 years of working in basically forecasting and leading business at a Dow Jones company. I have two master's degrees in business. It doesn't mean I'm right, but it means I do have some skill in being able to assess a situation and forecast the future. And then tie to that, if you've ever heard of something called Strengths Finder, like there's a book now, Find Your Strengths. My top two are strategic and futuristic. I'm just wired to kind of see where things are going. And that again does not mean I'm infallible. I could certainly be wrong, but I'm telling you a point of view based on me looking at the numbers. I've already been playing with 2024 and Q4 and 2025 and where is this likely going. I have a track record of success so far. I've been very accurate. So if you believe in my track record and if you believe in my skills, and if you believe I'm not, trading in hopium, but I'm trading in actual logical forecasts here, then I think we're not just changing the game, but Adam has moved us to an entirely different board. Let's go.